Okay, everybody, look, let's be honest with each other. Can we do that? What could possibly be more entertaining than the freak show that we watch every single day? And maybe I am part of that freak show. I guess we all are, but it's I'm laughing. All right, look, so this is my post-market wrap-up. Status post Federal Reserve monetary policy decision, which we will talk about on this Wednesday, March 16th, 2020. Lovely too. Well, people, look, as most of us expected, yes, the Federal Reserve did raise rates 25 basis points. They are so concerned about price stability, surging inflation. They are so absolutely committed to fighting inflation that they actually went out of their way and raised the federal funds rate 25 basis points. Make it up. Please, someone here, make that up, because this is some kind of distorted reality. Like I said, we have a lot to talk about. So again, I don't think this was a surprise to really most people. This was widely expected that the Fed would do something. I think most of you realized that was going to happen here. I think what might have caught people by surprise was the subsequent rally. Stocks higher across the board. It started yesterday. The market realized, I think at least, that we were getting a hike today. It would be, insignificant, and it was, obviously, but they're so concerned about inflation and price stability, they just had to raise that federal funds rate 25 basis points. Anyway, so yeah, it started yesterday. We've had this 10-year yield now for a while, moving higher. We are above 2%. We will settle here. Did you see how the banks responded today? The financial sector, boom. People, if you, one of my lions, were smart enough, I hope you are or were, to be buying the dips in the banks, JP Morgan, Goldman Sachs, and Bank of America, you are going to be rewarded, and I mean big time, moving forward. You have to have the ability to recognize opportunity when it's out here. When everyone is saying one thing, you really should be doing the opposite. How many posts have you seen on this blog? People negative on the banks. Oh, Greg, how are those banks working out for you? They couldn't be working out better. Couldn't possibly, because these are going to pay off. The Federal Reserve is going to raise rates this year several times, and that is very positive for the financial sector. It's positive for the banks, period, the end. And this is what you and I have been setting ourselves up for. While the freaks out there, like, the naysayers, they always get it wrong, and they will consistently get it wrong. And then they're going to go, how did that happen? Why does my life suck? Can someone tell me why I'm still living in my mother's basement? That's really what their issue is. But I'm trying to help these people. They don't want to be helped. That's fine. Anyway, so let's touch on a few other lovely things here. I'm writing all this stuff down. I got 2 pages of stuff here. So again, no surprise. And this is kind of, well, you tell me what this is. Fed Chair Powell, Yellowstain himself, said that inflation moving forward, their projection is higher. Really? So now they're telling us the truth that we're going to get higher inflation? Can I get a duh? Please, let's do this together. Let's make this a real big duh. On 3. Ready? 1, 2, 3, duh! Yeah. Make that stuff up. But the Federal Reserve, with regard to their rate hike situation, and they're going to be raising rates moving forward because they really want to fight inflation. They're so committed to it. And price stability, they've only overshot their target of 2% by hundreds and hundreds and hundreds of percent, but they're really committed this time. But there are special circumstances. We heard this yesterday. Special circumstances which may cause the Federal Reserve, yes, indeed, to raise rates moving forward, but also possibly even lower them as they have to adjust their policy. What they're trying to tell you is they're going to screw you. You see the screwing motion? Even harder. Just do realize that. In no way, shape, or form is the Federal Reserve concerned at all about inflation. However, we heard from a very, very respected economist today. Oh, yeah. He's actually a leading economist, and he has a pretty big audience. David Rosenberg. Okay, he's a nice guy. I've listened to him talk before, but look at his track record. I think it's pretty astoundingly disgusting. He's wrong most of the time, as most of these expert economists are. Okay, they're drinking the Kool-Aid. I don't know what the hell they're doing here. But he's said earlier today, are you ready for this? I got to get this correct, that the Federal Reserve is committed to attacking inflation. They're going to fight it tooth and nail, according to Dave over here. And that is going to lead to a couple of things. Housing prices coming down and the stock market, which is also going to drop. I guess he wasn't paying attention to what I've been saying over the past, month, saying that the stock market's going to really love it when the Fed raises rates. You see, he's probably thinking the polar opposite would happen. Most people did. Most people believe if the Fed raised rates, the market was going to tank. Okay. No, didn't work out too well. But anyway, look, these expert economists, I don't care how much you like them, how pretty they might be. Dave's not really pretty at all. He's kind of an overweight, middle-aged guy. Nothing against him. You know, he's just wrong most of the time, and he's going to be wrong here too. The stock market is going higher, much higher. And if you're smart enough, like I said, to be buying the dips here moving forward, to look for opportunity, you're going to rip this market's face off cleanly. Okay, with that said, let's move back on here to the Federal Reserve. I was talking about special circumstances. You know, what they're referring to is the war, the ongoing war, which will expand moving forward. And if something else happens, you know, some thing they've been talking about a lot lately, you know, chemical attacks, bio attacks, maybe even nuclear attack. Well, those would be very, very, very special. Very, very special circumstances. Look, why did the market go higher today? Why did the dollar crater today? The relative strength of the dollar, or the Dixie, cratered 0.75% today. Why? Well, maybe because it's no secret that the Federal Reserve is going to continue to do what? Inflate? Yes! Inflate like you have never seen before. Oh yeah, they're talking about their balance sheet. Did you hear that part? Oh, the Federal Reserve, we're going to be talking about at one of our next meetings, unloading or, you know, shrinking the Fed's balance sheet. How about no? Just like there was no taper, there will be no shrinking of the Fed's balance sheet. Where is all this cash coming from, okay? Hundreds of billions of dollars that we are now handing over to the Ukraine. Maybe 10% will get to the Ukraine to aid those people. We're actually supporting the war effort over there. Imagine my shock. Oh, someone around here has been telling you that hundreds of billions and even trillions of dollars are going to be thrown at this new war that's going to expand, a new arms race and arms deals. Yeah, you knew that was coming. All you need is a fraction of 1% of a functioning brain cell. Oh, yeah, but our president, retard, oh, he's going to throw hundreds of billions of dollars over there. He's already doing it. And where's that cash coming from? We don't have it. The Federal Reserve is going to give it to everybody. Yeah, except you. They're going to give you a royal screwing. Yeah, and you're going to like it too. Oh, and in case you didn't catch this part of the whole thing, the whole vomitous, putrid, disgusting speech that came out of its mouth, I'm referring to Jay Powell. He's talking about, unexpected, right here, unexpected supply chain disruptions. Oh, that's the cause for inflation. It's not the fact that the Fed has been inflating on a scale that has never been seen in the history of the world. Central banks collectively since the last meltdown has nothing to do with that. Now, it's supply chain disruptions. It's the energy crisis. Oh, yeah, we heard about that too. this is from on a totally different note here. The International Energy Agency here, well, they're warning of an oil market crisis. Really? And a global supply shock that's probably coming. Probably because they know it is. Duh! Okay, this is a fake out. What we've seen lately. We've had this shooting up of energy, then we crater down, and we're going back up. You doubt that? You shouldn't. Anyway, look, what else can I tell you here? The Fed, I love this part. When he is saying that the Fed is committed. Are you ready for this? Let me calm down a moment. So, Fed Chair Powell, the thing over there, he said the Fed is committed to price stability. Really? Do prices seem stable to you? Oh, they continue to rise. I guess that could be they're rising steadily. I don't know. But they're going to rise much more here. Okay? The Fed cannot stop inflation by simply raising rates. 25 basis points? He might have done this. I could hit my own eyeball that hard and it wouldn't even hurt. Ready? Let's say, maybe it hurt a little bit. Don't hit your own eyeball like that. It's it's dog shit, okay? It was a token little flick. That's all it was, okay? And the market, orgasmic over it. It's loving it, as you can see. And, look, the telltale sign here that the market, especially the currency market, doesn't believe the Fed wants to do a damn thing about inflation is the dollar cratering today. Look, you don't need to be a rocket scientist to figure this stuff out, people. All you need to have is one good eye. Don't poke yourself or flick yourself in the eye like I did. I can still see. And I can still see that some of you are naked. Put your damn clothes on. All right, look, people. What else is there to say? I don't know what to say anymore. Other than pretty much everything that has unfolded, we knew was going to happen. We're taking advantage of it. We are capitalizing on it. We're not going to stop. We are not going to deviate from anything that we are doing. You understand? Bet against the debt. Become your own central bank. Cryptocurrencies, Bitcoin today, over 41,000. Gold and silver falling under some pressure. Good. Embrace it. Despite the fact that the dollar nosedived, we saw gold and silver finish in the negative. How does that work? Okay. Well, in an environment of exploding global debt, and we haven't seen anything yet, imagine that the price of gold and silver has remained relatively stable. Yes, we've had some gains, some nice gains as of late, but it's so frankly rigged. It makes me want to puke, but at the same time, I'm loving it. Let them do what they got to do, and you and I, we're going to do what we got to do too. If that means we have to lick our silver, that's exactly what we're going to do. All right, people. I think I'm really done. I'll see you in the morning. Love all of you. Share the video.